people think that the government is going to come to save them. Like there's far too much reliance on the government benefits to pick you up where you need them. There are government benefits, obviously, in a lot of different scenarios, but most of the time they're not going to be enough for people to maintain the lifestyle that they have now.
Yeah.
So that's where this personal insurance comes in.
Welcome to Checks and Balances. This is Jess and Michaela back with another episode of The Takeover, sponsored by Partners Life.
Awesome. Yes. And today is Insurance 101. So we're aware this topic is not probably the most exciting, but it is an important one. And when we're thinking about the takeover, we want this to be like a back to basics. What does everyone need to know? We did budgeting, we did KiwiSaver. One of those things is insurance. And the reason is New Zealanders are notoriously uninsured. So I think a lot of people aren't educated on the subject. So it's an important one to do. It's interesting with insurance because there's two, also as a caveat to this, I have worked in superannuation and like investments, but insurance was new to me when I started as a financial advisor. So this has all been a learning process for me as well. So it's good because we're going to go over the basics that I've learned and hopefully that'll translate well to people who don't know anything about this. But there's two types of insurance and a lot of people know about general insurance. General insurance is stuff. Personal
Like car,
insurance. Yeah.
House.
Contents.
Contents?
Yeah.
Contents.
Yeah. And then personal insurance is people. So that's how you separate the two. And usually when you're talking to insurance advisors or insurance companies about things, they don't often cross over. Like general and personal insurances are kept quite separate in the way that people deal with them. And when it comes to personal insurance, there are lots of different types. Like there's so many variations of different types of personal insurance products, but we're going to focus on 4 of I would say the most common ones that we probably see as advisors. First one being life, then income protection, trauma, and health.
Income protection is interesting because I had never heard of that until I started working at Lighthouse. And I just, even if you had said it to me, I'd probably be like, well, what the hell's that? I probably don't need that.
Yeah.
But once someone explained it to me, I signed up right away.
Exactly. It is actually so important. And we'll go into the reasons for that. And, on that, in New Zealand, many people being underinsured, there's been a recent study that said around 54% of Kiwis have inadequate life insurance coverage. So over half of us don't have enough life insurance. And I think people are also quite wary of being sold things that they don't need, which is obviously, it's good to be savvy when it comes to these things, but also you've got to realize that there's a place for these products in your wider plan.
Insurance isn't a scam.
Yeah. And we can go into being overinsured and things like that as well, because that is a problem too. And the lack of coverage is important because it can lead to significant financial hardship. Like if in me and Blade's situation, that's my husband, we've bought this house this year. We've got a mortgage. We're both working. We don't have any kids. If one of us died, the other one would be screwed. Like, and if without life insurance, like we would be left. Like if something happened to Blade, I would be left with this huge mortgage and one that I can't afford to pay by myself. So what would I do? I'd have to sell the house.
Yeah.
So that's the last thing you want to go through. Like you've just lost your husband, your partner, whoever it is, and you've got to sell your house at the same time, worrying about money as well as losing that person.
Mm-hmm. Yeah, you lose half of your income.
Nightmare.
That you love.
Yeah,
everything.
exactly.
Yeah, terrible.
Yeah. So there is a really important place for it. And the other thing with this is that people think that the government is going to come to save them. Like there's far too much reliance on the government benefits to pick you up where you need them. There are government benefits, obviously, in a lot of different scenarios, but most of the time they're not going to be enough for people to maintain the lifestyle that they have now.
Yeah.
So that's where this personal insurance comes in. The last important thing I want to touch on is that although it might sound like kind of a dry topic, and people are always obsessed with growing their wealth. They're always excited about investment property and investments and shares and all that kind of stuff. And they want to get into all that stuff, but nobody ever talks about protecting the wealth that you have.
Mm-hmm.
So it's all very well to focus on the growth and the exciting things, but it could all be fruitless if you haven't protected it in the right way as well.
Well, yeah, you could lose all of that stuff that you've worked so hard to get. So
exactly.
Definitely an important piece.
Yeah.
And it's interesting. It's not boring.
Yeah, I keep on saying
it might be a little bit boring.
We're going to try and make it interesting. Yeah, it definitely is one of those things that may feel like a waste of money, like you're money's leaving your account every month and it feels like for no reason. And to be honest, like most people aren't going to ever claim on these personal insurances. The vast majority of people will never claim. And that's a good thing. That means you've lived a long life, you've managed to work your whole life, you've had good health, like all those things are really positive. But all of us are paying our premiums for the people that do claim it and really need it. And you could be one of those people, you just never know.
It's definitely jarring seeing, like, because I pay for several different, like the life, the income protection, the health insurance. And like, I just try not to look at those transactions going out because it's needed. So much money. And I'm grateful I can afford to pay those ongoing amounts so that I can protect myself.
Yeah.
And at the same time, I kind of have it in my head that if I cancel any of these things, like that will be as soon as I cancel it, it'll be bad juju and I will immediately get like hit by a bus or like get a disease or something. So it keeps me going. I'll keep paying it.
Yeah. We do actually have a sad story along those lines a bit later, which we'll touch on. So it is not unheard of. Let's work through each type of insurance one by one. We'll start with the life insurance. I think that's the most simple one. So the way this works is that you will pay a premium to your insurer, and if you pass away early, they will pay an agreed lump sum to your beneficiaries. So this lump sum could be used for anything, whether it's like paying down mortgage, used for your funeral costs. It could be used for income replacement for your remaining spouse or to support your kids, go into university fund. It's totally up to your beneficiaries where that money goes. But the way that amount is normally calculated, because obviously that's going to be really different for different people, right? People have different financial obligations in their life. So that's where a financial advisor an insurance advisor specifically can help you work that out. They'll look at your mortgage, they'll look at your expenses, your income, whether you have dependents, your partner's income, everything, and work out a recommended amount of life insurance for you to have.
If you get paid out life insurance, do they pay you in a lump sum always, or like can you get like a monthly amount or
there
something?
Are options where you can have a monthly amount paid out as well. There's definitely a variation of life insurance that does that. The other thing that can also happen is if you not necessarily pass away, but if you're diagnosed with a terminal illness. So if you're diagnosed with 12 months, or it's like depends on the policy, but 12 months or less to live is kind of a good rule of thumb. You could also get paid out at that point too.
Oh, interesting.
So I'm describing a very basic version of life insurance, but there's lots of nuances, lots of other add-on benefits that come with it. But at a most basic level, that's what it looks like. Do you have life insurance?
I'm pretty sure. I think that I was loaded up with insurance by your team when I started working.
Good, yeah.
Grateful.
Yeah. So the types of people that need this, and it's not that everybody that needs life insurance. Like if somebody is especially, I guess an example, just speaking generally, it's important that this is not financial advice, not personal financial advice. We're speaking generally, but somebody who's older with a lot of assets, no dependents, and no income, say, like if one partner was to pass away, the other partner could still live in their house. They've got no mortgage. They would survive fine. Does that person need life insurance?
Probably not.
Probably not so much. Whereas people in our scenarios, which are right at the beginning of our paying our mortgages and things like that, it's more important. There are really sad stories around, like all you have to do is have a quick Google, which is what I've done. There are sad stories around about people who have cancelled their insurances, especially at the moment when cost of living is really tough. And you can understand it, right? Like people are looking at their budgets and thinking, how can I cut back on costs? Where can I save money?
You want that extra $200 a month that could go so far.
Yeah, and it's, it does make quite a difference to their day-to-day life. It doesn't feel as if insurance is making a big difference to their day-to-day life in the moment. But there's a sad story from April this year where a young mum, she had a toddler and a baby, and in April she cancelled her life insurance that she'd had for 10 years and was then diagnosed with terminal cancer shortly after.
Oh my God.
So that is really worst case scenario for them. It's absolutely awful. And she was not able to work, so her husband had to stay home, look after the kids, so they're down income, she can't work, she's diagnosed terminal. It's like absolute nightmare. So you do see examples of this, and I think the important point to take away from that is the expert advice is really important. If you feel like you can't afford it in your budget, that's totally valid at the moment especially. go and speak to your advisor and be like, hey, look, I'm really struggling with these premiums. There are a number of levers that your advisor can pull. There are things like premium holidays that insurers will do. So that just means it puts your premiums on hold for like 6 months.
Oh, right.
All you've got to do is kind of be like, hey, we're really struggling here. We don't want to cancel it, but we can't afford the premiums right now. What can we do?
If you pause that, like if you do a premium holiday, are you still covered during that time?
Yeah.
So if something happened to you in that 6 months, you could still claim.
Yeah, exactly. Yeah. So there's these things that people just don't know about, or you could reduce your cover. You know, it's better to have some than none. So there's definitely always options for people to work into their budget, which I think is a really important one, instead of just cancelling it altogether. So the next one of these is income protection. So this is a bit different because it works as a replacement for your income if you can't work.
Right.
So a lot of people will go, hey, but ACC does that, because it sounds similar, right? ACC does do that. So if you're off work due to an accident, then you get paid 80%, depending on the circumstances. You get paid 80% of your income, right? But what ACC does not cover is if you're taking time off work because of an illness. So that is not an accident. If you say had a stroke or something, or a heart attack or cancer, and had to take time off work, obviously your workplace, some workplaces are really kind and will give you time off indefinitely. Some, you have a certain amount of sick leave that once you've used up that sick leave, what do?
And you're not going to get wages from your employer if you're not working. They might accept you back to your job when you're better, but they're not going to pay you while you're off.
Yeah, not all will. So that's where our income protection comes in. And just like ACC, it will typically cover a percentage of your income. So 80%, let's say, 75, 80%. And why do you think that is?
I don't know. You tell me.
It's because there has to be some incentive to go back to work.
Yeah, I guess if someone was paying me 100% of my income
to sit
just
at home,
to, like, you know, I don't know, I've got long COVID or something.
Yeah.
I'm like, I'll just hang out.
Yeah, exactly. So there needs to be some kind of difference so that people will actually go back to work. A few of the key features of income protection are, first of all, the waiting period. So what this means is the amount of time that you wait between going off work and actually the benefit kicking in. So
it won't start right away. You
can choose. So you have options. And this is one of the levers that advisors can pull, right? So some people have a 4-week waiting period on that benefit. Other people might have a 13-week waiting period on that benefit. And the idea would be, if you've built a holistic plan, the idea is that you would have hopefully 3 to 6 months of expenses as an emergency fund. Yes, to cover you during that period of time. And then your insurance will kick in after, let's say, 13 weeks. So, and what do you think the difference that makes to the premium? Let's say 4 weeks waiting period to a 13-week waiting period.
I'd assume
which one's cheaper?
The longer period is probably going to cost you less, right?
Exactly. So the longer waiting period costs you less in premiums because there's less of a chance that you're still going to be off work after 13 weeks.
Because you could get ill and then only actually need 4 weeks off.
8 weeks or whatever, and then you're back, right? And your emergency fund has covered you, or your sick leave has covered you for a period of time. So that's one thing, the waiting period. So the other feature of income protection is the benefit period, which sounds quite self-explanatory, but basically that means how long you're going to receive the money for.
Right.
So typical options would be 2 years, 5 years, or to age 65. So which one do you think is the most expensive?
Well, to age 65.
Correct, because
that's crazy, actually. Sorry, I assumed the longest you could do would be a couple years.
No.
But you can have it set up so it pays you until retirement
age. Exactly.
That's got to be insanely expensive.
So if you had, and like I've spoken to people before who are on these income protection claims and they've had a medical condition arise, which means that they can't work, they will get paid a percentage of what they were getting paid right until age 65.
I'd be interesting to know how many people sign up for that option, because you've got to think, like, you must have a pretty bleak outlook if you're going to sign up for that much coverage.
Yeah.
Obviously, you don't know that you're going to fall ill at any point, and to pay that much for such an extended coverage.
I would say most people, if they can afford it, do.
Yeah, I guess that's the piece.
And because if you look at, especially once you, like what we do in the wealth team is looking at your lifetime projections of your income. And like James always says, one of your biggest assets is your income. So that's what we're protecting here, right? And like, if you look at most people's plans without their income, or at least a good percentage of it, they are screwed. Like their life plan is going to look totally different without protecting their income to 65. So I think that's probably good motivation.
Would these be like people that maybe have, like, not that they have a pre-existing condition, but maybe there's something that runs in their family that they're worried could impact them or something? I'm just trying to think of why you would sign up for that expensive of a thing for that long. Like, it's such a crazy long
The
time.
other thing is that it's like, obviously the 2-year and 5-year benefits periods are they are cheaper, but it's not necessarily crazy expensive to have it to age 65 either.
Really?
Like if you weigh it up on balance, if you think of the outcome of not having your own income to 65 versus the premium that you're paying, and that obviously totally depends on your age and your health and what exclusions or loadings they've put on, but it's worth it. Like even though it might sound like a lot, actually at the end of the day, it's not that much in the grand scheme of things for what you're protecting.
So interesting. So I feel like I need you to next time after this, I want to look at the difference in cost.
Yeah, we can totally do that.
Because I don't even, I have income protection, but I don't know what the benefit period is.
We should look at that.
Yeah, and I want to see what the cost difference would be.
Yeah, let's
be
do
interesting.
And because that's, like I said before, one of the levers that people can pull. So if you feel like, okay, I've got income protection, it's feeling too expensive right now, I'm going to cancel it. Let's not do that. Let's look at, do we pull the benefit period back just so you can keep it and afford it for now? Pull the benefit period back to 2 or 5 years. It's better to have that than nothing, right? So yeah, those are some of the key features. Who needs this type of insurance? Anyone that relies on their income to live, which
so
feels like a lot of
everybody.
Yeah, it feels like a lot of people. It's not everybody. There's some people lucky enough in the position that if their job was to disappear tomorrow, they're actually fine. They've got enough assets that they could live off those. But for a lot of us,
for us normal people, get income protection.
I actually went looking around for a few case studies on income protection. I found this person on Reddit. It's your favorite, Reddit. You love Reddit. I thought of you when I
read it on Reddit.
Yeah, I can't read out this person's name because on a podcast I don't think.
Right.
Like their screen name.
Anonymity.
I'm going to leave it out. Yeah. I'm going to tell people it has something to do with sheep. I'll leave it there. So their story is, I took out income protection the day I took out a mortgage with my young family. A year later, I was diagnosed with a lifelong chronic condition, which meant time in hospital, which was paid for by insurance. Additionally, if my condition gets worse and I'm unable to work for the rest of my life, the income protection covers my living expenses, KiwiSaver, and the mortgage until I turn 65. This means security for kids and family regardless of my health. So for me, getting income protection was one of the best decisions in life. ACC doesn't pay if you're unable to work due to this condition, and MSD is not going to cover my Auckland-sized mortgage.
Auckland-sized mortgage.
Yeah, key part of that. Yeah, so this person's obviously done their research. They've figured out actually that was a really good decision for them. They're one of the few people who luckily had insurance and claimed on it. So it's an interesting one to think about.
So James, before we continue, I have got a special announcement.
Have you started sticking to your budget?
Absolutely not.
You finally made it as an after-hours DJ.
I wish. Mate, the thing is, we have got a brand new podcast partner, Partners Life.
You mean the award-winning insurance provider with over 300,000 Kiwis insured?
Yep, they're also a New Zealand-operated company, and they are passionate about increasing financial literacy amongst Kiwis.
Sounds like a great match. Where can I learn more about them?
Check out their website in our show notes below.
Really thought DJ Magic Mike was going to be a global sensation for a second.
The next one of these is trauma insurance. This is also quite a simple one, I think. It's also known as critical illness insurance. And what this is a lump sum payment in the event of a certain condition. So usually an insurer, they're quite similar across there's like 5 big insurance providers in New Zealand, which all have quite good products. And these lists will be very similar across them. But they normally have about 50 conditions listed. The main ones are cancer, heart attack, and stroke.
Right.
But there's lots of other things on that list. And if you have an instance of one of those conditions, they will pay you a trauma lump sum, which
does
you've
it have
agreed.
to be? Sorry, but
That's
like
fine.
if in the case of heart attack or stroke, those are obviously terrible events, but like sometimes people will just be fine after a few months. So
Yeah.
does it not matter, like, this will sound
How
bad, but
bad it
what
is?
condition you're in post event, they'll still pay you out?
Yeah, good question. So a policy wording will have very clear definitions of what needs to happen in each event in order for the payment to be triggered. So, and it gets really medically specific. So it's quite interesting as a finance person then digging into insurance, and it's like a certain valve or a part of your heart, something has to happen to a part of your heart, or you like, it gets very specific.
It is interesting actually, like sitting across from the wealth team, which has insurance advisors like Ash, for example.
Yeah.
And sometimes it sounds like you guys are doctors on the phone, like talking about like, well, did the blood test say this or that? And I'm like, hold on, are we in a finance firm, or like, are we in the ER?
It's a whole nother realm. And that's what I mean about what I was saying. Like, this is all new to me, insurance. I've worked in finance my whole career, but yeah, it feels like a whole different world. There's so much to know. And anybody who's read through an insurance policy document will know that, because it gets into this level of detail, right? So always worth speaking with your advisor about what, if you're worried, especially those big three: cancer, heart attack, and stroke. Be aware of like some policy wordings are more generous than others. They're not all created equal. So that's an important thing to cover off with your advisor as well. And when it comes to this lump sum, when it gets paid out, it can be for anything that you want. So say I had a stroke or something and I had to take time off work, and yes, I've got an emergency fund, but say Blade also wanted to take some time off work to look after me because I can't get about the same way I could, and say we needed to get a ramp put into the house so that I could access it easier, or whatever else, that lump sum can be used towards all of those things, rehabilitation costs, the whole lot. So totally up to you how you spend it.
Can you spend it on like a blowout shopping spree? Like if I get cancer and I'm just like, listen, you know what? I'm just gonna live my absolute best life.
Yeah.
Can I just like blow it all on anything?
Your financial advisor might not agree with that.
Okay, plug your ears, James Blair, if you're listening to this.
It's like, did you have course related costs at uni?
I don't think that's a thing.
Not
in
a thing.
Good
in
old
Canada.
But do tell.
We have this thing called course related costs, which goes onto your student loan. And I'm told by Georgia that they're now checking what you're spending that on. But back in my day, when I was at uni, you'd get course-related costs and you'd spend it on whatever you want.
Just like a little.
Could be a couple of nights out. It could be
spend it on R&V tickets.
Yeah, exactly. So yeah, a trauma lump sum, you can spend it on any variety of things that you want to help. But they're not going to come knocking on your door and check what you've spent it on. No.
All right. Spending spree, here we come.
No. Yes. Cool. So the last one is health insurance. So this is probably I'd say life and health insurance are probably the ones that people know the most about. So we won't get into this one too much, but at its most basic level, it's covering medical expenses that allow you access to private healthcare services. It means that you can avoid the really long waiting times in the public health system, which I think a lot of people have anecdotal stories at the moment of this getting worse.
Mm-hmm.
I actually looked up some stats last night about what some of the waiting times are like. So we can dig into some of those because I think you'd be surprised. But the 3 types of health insurance cover to kind of know about. The first one's hospital cover. So that's just your real basic level.
Like hospital stays.
Yeah, covers the cost of treatment and accommodation in hospital. Then there's an add-on specialists and tests. So like it says, that's paying for consultations with specialists, diagnostic tests. Obviously, that's going to cost a little bit more because it's a sort of a top up to the hospital cover. And then when we say comprehensive health cover, that's normally obviously the 2 things, the hospital and specialist, but then there'll be additional things. Some of them do dentists and opticians and, a whole range.
I have like a couple $100 towards like glasses each year or something.
Yeah.
And I actually have a lot to say about health insurance.
Do you?
So you know.
Please tell me.
Okay, so I find it very interesting because obviously I'm from Canada. And in Canada, I think we have a pretty similar public health system. But in terms of health insurance, pretty much every employer will offer you health insurance benefits as well as like dental benefits, which I have yet to see being a thing here, unless you add it on, like you said, to your health insurance
Yeah.
package. But like, even if you were a cashier working in a grocery store, you would still have health insurance benefits through your employer. So I was
really?
very surprised when I moved over here and I started applying for jobs, and I was like, what are the benefits? And everyone's like, what do you mean benefits? You get a
Work
job.
here and you get paid.
You get paid. That's the benefit. I'm like,
Yeah.
no dental, no like health
Yeah.
insurance. Even, I've had a job where once a year you had a little account of like $600 and you could use it for anything health related, like even just a massage or like sauna or gym,
Goodness.
anything.
We don't have
And
that.
like that kind of thing is so common back home. So I was really surprised when I came here and it just wasn't a thing. So for me, I pay for like the biggest, juiciest health insurance package at Southern Cross because I was just so used to having all of these benefits covered through work, and I wasn't really willing to lose those kinds of coverages. And for me, it's been really beneficial because I actually have claimed a lot on my health insurance here, which I can talk about. But like just skipping those queues, like you said, the wait times are so long.
We've had people in the office had things pop up and talk about waiting times being a year, like 9 months to a year. And I brought up, this is the Health New Zealand Counties Manukau average waiting time by priority as of late last year. So this is, I believe, the targeted wait times, and it's got each of the specialities and then urgent, semi-urgent, and routine and how many weeks. So say you had an urgent gynecology issue. How long do you think, if it's an urgent gynecology issue?
See, in my head, you should be in there in like a week.
5 for urgent. What if it's semi-urgent?
It's not very urgent.
Yeah, it doesn't sound very urgent. What if it's semi-urgent?
Probably like a year.
33 weeks.
Wow.
So for a semi-urgent, and like that's just crazy.
That's
what about
insane.
dermatology for pediatrics is children, right?
Yeah.
So
pediatric dermatology.
Pediatric dermatology,
Very
urgent.
specific.
Urgent. How urgent's that?
Well, I know you're going to tell me it's like 5 months or something.
Well, it's
but
10,
in my
10
heart,
weeks.
I wish it was like a
I
week.
know, the kids, their skin.
The kids in their skin.
I know, they've got to wait 10 weeks for an urgent problem. General medicine's 10 weeks for urgent. It's just, and like the routine week times are just crazy. What's this one? Orthopedic surgery for a routine is 52 weeks.
See, that's what I think, like, for me, I had last year, a very, very minor concern my doctor had. And she was like, I'm going to send you to a specialist. And I was like, sweet, that's fine. I have health insurance. I went to the specialist like within that week.
Wow.
And then met with the specialist, and she said, I think I want to do some investigative surgery. And I, in my head, was thinking, oh, it'll probably be a few months wait or something, because I hadn't used my insurance before. So I didn't really know how much it pushed things along.
Yeah.
I was in the hospital in surgery the next week.
Wow.
It was so fast, crazy fast. And I got to say, everyone was also so lovely. And I don't know if that's
that's always the
insurance-y thing, but
yeah. And it's, I guess, the thing with health insurance is that people, obviously there is a public system, there are all these wait times, but this does cost money at the end of the day. So it's a bit of for some people, a luxury to be able to fit this into their budget.
Yeah.
So I think it's important to acknowledge that. But it's one of those things that if you can afford it and you've got room in your budget, then certainly consider it. I also looked up last night a few articles. In the 3 months to December 23, 37% of patients have been waiting more than 4 months to see a specialist, which is an increase with the previous quarter. Or 40% of patients have waited more than 4 months for surgery or other treatments, up from 30%. So it's getting worse out there as far as our health system, which is really sad. And obviously probably a little bit of a hangover from COVID. I'm sure a lot of people have probably left.
Well, we have
Australia.
heaps of, so many nurses and doctors leaving the country as well. And we're not getting many back the other way. So there's so many
reasons
things
for
at
it.
play.
Yeah, exactly. And so having that health insurance means you've got greater control over who's treating you, where you're treated, as you've experienced. And you also have access to treatments and procedures that are not available necessarily on the public system.
Oh,
So
interesting.
these are all important factors to take in. Again, like everything, not all health insurances are created equal. And a good advisor will talk you through the differences. The other thing you should look at as well, if you've got the big juicy health insurance with the dental, I'm sure I've heard James mention this, the dental add-on, whatever the premium is equals the amount of money you can claim in a year. Does that make sense? So like you could let's say you're paying $10 a month for your it won't be
Dental
that. Say
add-on.
$100 a month for your dental, but you can only claim $1,200 a year for your dental. So you're just
that's like 2 fillings.
But like, do you see what I mean? Like,
Yeah.
there's no point paying the premium because you
That's
just save
not-
the money yourself.
Yeah.
Do you know what I mean?
That's also doesn't really
Have a look
cover
at that.
much.
Yeah, I'm sure
Yeah.
I've heard that before.
Actually, sorry, the one more thing I want to talk about is speaking on the cost, because after I had that like minor surgery or whatever, they sent me the bill in the mail. Like I didn't have to pay it because insurance had covered it.
Yeah.
But they sent me a copy of the itemized bill for the hospital stay.
Yeah.
And it was crazy. Like I was in there for maybe an hour total, like everything. And it was about $12,000, I think.
Stop.
And they
Really?
had detailed everything out down to like the gloves that they used. And I was just thinking, I mean, obviously there's probably not, I think even if I was using the public system, I wouldn't actually have to pay that, I'm assuming.
No. But you would have waited like 4 months.
Yeah. But it's actually crazy how much that stuff
Adds
costs.
up. I'd like to know who's the person involved in everything counting the gloves. Like, who's the glove counter? Who's
There's
there being
someone in the
like,
corner of the surgery room being like, and they've used one pair.
and then she used some hand sanitizer. Like, who's doing that? Yeah, no, that's super interesting, isn't it? So we've gone through all of those types of insurance, hopefully giving you a good high-level view of that. The next few things I want to whip through are some common myths, some FAQ, and some tips for picking the right insurance. So the myths that I want to touch on: I don't need insurance because I'm young and healthy. So I think this is a very, very common attitude, especially when you're young and your budget's tight, right? And I've had that attitude myself. You know, you sort of think the public system will save me. I'm young and healthy. It doesn't matter. But obviously, even young and healthy people can experience medical events. Also, the benefit to getting these types of insurances in place early is that if you have pre-existing conditions, when you apply for insurance, they won't always necessarily be covered. So you always have to declare the pre-existing condition, and then the insurer will either tell you, yes, we're going to include it in your cover, no, that's going to be excluded. And it could be anything from mental health, it could be a knee surgery or something people have had through rugby or whatever it is, or they might put a loading on. So a loading means that they'll charge a percentage. So this could be if you're, like, say, a smoker or something like that. They'll put a 50% loading or something like that, which means that your premiums are 50% higher than if you were a non-smoker.
And that affects your entire coverage, I guess, not just like smoking related things like lung cancer.
Yeah, exactly. Yeah. So a loading applies to your whole thing. So that's one reason that considering health insurance a bit earlier in life could be beneficial. Myth number 2, insurance is too expensive. So like we've already talked about, the cost of insurance can be really tailored to fit your budget. There are things that advisors can do to make it cheaper for you. A good advisor will tell you the levels of cover that you should have, ideally, like, this is your situation, this is the cover I'd recommend here. And then you can say, look, I've actually only got room in my budget to spend this much. And then they will help you to adapt and prioritize the covers so that you are covered in the best way possible for your budget. So that's the role of an advisor in this process. Cool. So myth number 3 is that government benefits will be enough. And I went online last night, made up this little scenario in my head of, let's say I had cancer and I was off work, Blade's still working. There's this little questionnaire you can do online on the government website of what you could actually receive as part of a sickness benefit. The output that it gave me was that I, first of all, didn't qualify for a supported living payment.
Oh.
I don't know why. So I would encourage you to go and do this quiz, and just to give you like perspective on what you would actually receive. Pretend you've got sick and your partner's still working or whatever it is. Put your details in and see what you would actually be eligible for, because all I got was an accommodation supplement between $13 and $168 per week.
That is such a range.
I know. And also,
Sorry, mate, $13 a week. Sorry,
yeah, and $168 a week. Like, again, my Auckland size mortgage isn't going to do a lot. They also offered me, bless, a community services card, digital skills training, and food safety training, which
Sorry.
which lovely.
So
like
basically,
that's really nice.
MSD doesn't give
I would encourage people to go and try this themselves and just see what it comes out with, because I don't know what it is about my situation. And yeah, food safety training, it's all very well, but I need money, like if I'm on work. So yeah, that was quite interesting. Now, clarifying some frequently asked questions. How do I determine how much insurance I need? So like we've said, that's considering your financial obligations, your mortgage, your debts, children, daily living expenses. All of that stuff's important. A financial advisor will help you calculate the appropriate amount of coverage for you and your budget. Can I have multiple insurance policies? The answer is yes. So you can have any combination of any of these insurance policies. You can, really ramp up your health insurance, pull back on life if that's what you want to do and your advisor lets you. But they will guide you on the most appropriate levels of cover for all of them and give you a good combination of them to make sure there are no gaps.
And they don't all have to be at the same provider too, right? You can have things across different providers.
Totally. You don't see it super often because there's quite often a benefit of having everything rolled together, almost like your general insurance.
Well, like bundling it.
Yeah, bundling it. So I've got a lot of my insurance with Tower, for instance, and I get a discount on that. So some people do that. But yeah, technically you could have your health insurance with Southern Cross and all your other insurances could be with Partners Life, for instance, just for example.
Shout out Partners Life.
Cool. And so tips for choosing the right insurance policy for your needs. Assessing your financial situation is key, your current financial obligations as well as future needs. Compare policies. So make sure you shop around and compare policies from different insurers. That's a really important one. And again, that is one that an impartial advisor will do for you. If you go straight to an insurance provider, they can only advise on their own products. If you're finding an independent advisor, they will be able to look across the board at different providers, compare the cover, compare the premiums, compare the customer service. And an advisor is dealing with these insurance companies day in, day out. They know how the customer service goes. I won't name them, but there was this one provider that told us yesterday, Pete and I could not believe it, 76 working days is their current turnaround time.
To respond to something.
To action a very simple request. I think it was an increase on the excess of a policy.
Yeah.
Which
76 days.
We thought they said 7 or 6 days, and we're like, that's a weird way to word that. And no, 76 working days.
That's insane.
So obviously, as an advisor, we're seeing these types of things and thinking, well, what kind of customer service are people going to be getting from that provider, and are we going to be recommending them?
That's worse than a bank.
Terrible. Tip number 3 is just to regularly review your coverage. And again, your insurance advisor should be reaching out to you at least every year just to be like, hey, checking in, do you want a review of your coverage? And that's important because people's life situations can change. So you pay down your mortgage, your kids leave home, your jobs change, everything's constantly changing and evolving. So it might be that one day you'll wake up and you're overinsured. So you've got too much insurance and you're paying too much for what you actually need.
That's common too. We see that a lot in people's mortgage applications and when they declare their expenses.
Yeah.
And I will say, well, why are you 25 years old and you're paying like $600 a month in different insurances? So that's when I send them to you guys.
They've been oversold.
Yeah. Just to check, because you just, obviously most of the time you're trusting someone that you're taking advice from, but sometimes you'll end up in a situation where you get too much.
Yeah. And like we said, as your life changes, these things change as well. So really important to keep on top of that. So we've covered off a lot today. We've really burned through a lot of insurance chat, but I think it's quite useful to know and an important one for people to address. Like we said, budgeting 101 was a good place to start. Then your KiwiSaver and insurance would be the next one on that list. So hope this has been helpful. Thank you so much to Partners Life for sponsoring the episode. Don't forget to like, review, and subscribe, and we'll see you next time.